Hello and welcome to the Sand to Pearls Stock Market Commentary. Market week ending Friday, November 8th, 2013. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 1.65 to 1.44, remaining in bullish territory. The total count of securities in bullish or bearish patterns decreased fractionally to 2,276. The count of bearish stocks increased 8%, while the count of stocks in bullish patterns decreased 5%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 10 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 119 points for the 9th decline in 15 weeks. At a positive 244.57 points, it remains below the October 2012 top and the October 2013 top, the second and third lowest tops above plus 100 in the last 35 months. So the NASI continues below 7 of the 9 tops over plus 100 and above all 6 of the bottoms below minus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in distribution mode. In the last 2 weeks, it had 1 accumulation day and 6 distribution days. Of the other indexes, the S&P 500 Deposit Receipts and the Diamonds Trust ended in distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 also ended in distribution mode. Momentum. This week, the CCI 20 daily fell and rose within the plus or minus 50 range, valid for a zero-line reject. However, the drop was steeper than the rise, indicating insufficient momentum to the upside. The CCI 20 daily now has 2 days below zero. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 39 weeks ago, while the daily CCI 20 began a Woody's uptrend 8 weeks ago. The CCI 20 weekly continues above plus 100 and remains outside the plus or minus 50 range for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, brokers has entered the top 5. Banks has left the bottom 5 and entered the top 5. Networkers has left the bottom 5. Gold and silver remain in the bottom 5. Bearish, disk drives continues in the bottom 5. REITs has entered the bottom 5. S&P retail has left the top 5. Focus this week. The Thomson Reuters University of Michigan's preliminary reading on the overall index of consumer sentiment has fallen for the 4th straight month, a noticeably strong trend for recent years. In such a climate, will the market really be able to sustain ever more new all-time highs? Thank you for joining us for this week's Sand to Pearls stock market commentary. We hope that you are having a fabulous weekend, that you have a happy Veterans Day tomorrow, and we wish you for this week coming up, happy trading.